This will be on harnessing generative AI and building AI risk models in insurance. So on the panel, I would like to invite Sanhitha Seerapu, who's the Principal Architect, Insurance Solutions and APAC Lead at Google. Mr. Arindam Ghosh, who's the Chief Technology Officer and Head of Corporate Strategy, Star Union Dai-ichi Life Insurance. Mr. Avinash Ramachandran, who's the COO at Assurekit. Mr. Albert Shyy, who's the Managing Director at Eurazeo. Mr. Vijayaraghavan Balaji, who's the CTO at ICICI Bank. And to moderate this event, we have Mr. John Spence, who's the Managing Director at Asian Capital Advisors. So John, the panel is all yours.
Thank you very much. Ladies and gentlemen, can I have you standing up, please? Everyone standing up. Standing up. Thank you. Reach for the sky. Bend this way. Bend that way. Twinkle your hands. Excellent. And clap. Excellent. Thank you very much. Well done. Had nothing to do with AI, but I thought good fun. Right, well, today's session here, and we're going to move it along at a very fast clip, is harnessing generative AI and building AI risk models in insurance. And we're going to start off by sort of understanding AI in the businesses that are represented here on stage. Would you like to start us off? And do an introduction and start us off.
Arindam Ghosh, CTO and Chief of Strategy in Star Union Dai-ichi Life. From the AI perspective, as John was pointing out, if you are not using AI in today's world, whether it's a Gen or otherwise, you start feeling you are feeling left behind, correct? But on a serious note, yeah, there are quite a few use cases. Primarily, I'll start from the knowledge management side very quickly, wherein you are actually using AI to support your employees, your customer, your agent on field in terms of leveraging the knowledge mining capability and supporting them with latest product, rule, the strategy, those kind of a bit. So it brings in somewhat parity, standardization across the pool of employees and stuff. Second use cases, there are a lot of use cases in the risk management side. And again, in the knowledge management side also in a certain way you are mitigating risk by ensuring you are providing the right kind of a support at the right point of time. There is a standardization. And on the risk management side, you use AI-driven modeling in underwriting, in claim. Those are standard use cases. At the same time, you also do some bit of a pricing and capital-related risk modeling. That is also one of the very common use cases. And again, something very interesting coming out of it, creating scenario for product fitment. So when you are meeting your client, when you are meeting, trying to identify the type of product they are looking for, instead of the classical kind of a questionnaire-driven model, you may be able to throw some standard fitment areas and go through some use cases. So those are the typical thing. On the back-end side, again, you are leveraging platforms like, where you actually harness the benefit of coding or go through multiple use cases where in Fabric or those kind of a platform, the software development lifecycle gets shortened. You identify the bug in the code in a much faster manner and you deploy it faster way. So that's also kind of a risk management, I would rather say. So these are the standard use cases. Looking forward to some interesting and exciting kind of use cases from the folks out here.
That's great. Thank you. Albert.
You.
Great. Hi, everyone. My name is Albert. I'm Managing Director at a VC company called Eurazeo. We invest in many different strategies globally, but specifically we launched a dedicated Insurtech fund that's focusing on Southeast Asia and India over the past couple of years. So we've been pretty deeply looking at Insurtech companies and Insurtech models here in India. I think maybe just briefly to touch upon your point on AI here. So obviously we're an investment company, but I think probably every company that's attending this conference is incorporating AI in some way in its business model. And I think as we are seeing kind of how integrated it's becoming whether that's on the productivity side with sales improvement, whether that's on the cost saving side with savings on the kind of the underwriting support. I think we're seeing many use cases that are coming up in different applications of AI, which I think some of my fellow panelists will touch upon further.
San, you're at Google selling lots of services here. Why don't you talk about what you're using for insurance?
So we are an AI-first company, right? So all the solutions that we build for insurers is around helping them acquire customers faster, understand their product strategy better, plan for the future launches better, customized marketing, a lot of use cases in actuarial, automating the underwriting, in the claims area, fraud prevention. So it's a host of use cases across the life cycle of a policyholder.
And Vijay, how is ICICI using AI?
We have been using AI in multiple factors. In fact, what Arindam just now mentioned is the areas generally we have been working. I'm not just talking about ICICI Bank, I'm talking about the ICICI Group entire as a BFSI. I would say that the entire group has been using in multiple areas. Model validations, I mean, some of the areas which he was talking about, model validation, employee productivity, all these areas we have been using, and experiments are in various stages within the industry. Of course, we have to wade through the regulatory issues, I mean, what regulators think about. And we are working around this one, what is acceptable to regulator, as well as how do we use AI. That this is the areas where we are concentrating at this point of time.
And just an extra comment about how you compare bank to insurance company with your insurance background.
On the AI?
AI. Yeah.
I know, AI, I think insurance can have a better play compared to a banking, because banking is much more regulated, much more closely regulated than an insurance company. And that way insurance can have a better play in AI, that's what I would say. Especially the general insurers, actually they have done a fantastic use cases, which I could say not just the ICICI Lombard, but many other insurers in the country. They have done quite a bit. Of course, life insurance is a little bit lagging behind, I would say that, this one at this point of time. But the banking, actually, we have more this one to cross than an insurance company at this point of time.
Thank you for that. Avinash.
So yeah, we're a startup. We're a smaller firm than pretty much everyone here. We use AI in two very distinct places. One is on the support side of things, which primarily as a co-pilot, something that will help my support staff get an idea of how to go about addressing a support request or a claim. And one is a deep new age risk model that works specifically on purchase protection and e-commerce risks, which is a new green field for insurance in general, especially in India. So yeah, two distinct branches of use cases for AI for us.
And you can apply it. You can. What can you do with it? The AI. What are you doing with it? You're actually monitoring.
Yeah,
predicting the outcomes of your customers.
Yeah. So the AI risk model predicts, gives risk scores on a particular e-commerce order based on the customer's history and details and address, and as well as the items in the cart and the brands that he's purchasing or he or she is purchasing, etc. So it allows me to do things like predict the probability of a return and then price that as a protection product or an insurance plan or guarantee plan. We sell it as a guarantee plan. So it allows me to do all those things, but fundamentally what the model does is predict that risk. What is this probability that this order is, something from this order is going to come back as a return or is not going to get delivered at all? Right? That is one fundamental case where we have a really, comprehensive AI model that runs.
Vijay, can I just come back to you on how do you use AI for risk models? Can you give us one use case, at least one use case?
No, in risk modeling, again, this is about model validations. This is one area where we use AI very great extent, risk modeling.
So when you use risk modeling, does this mean a pricing issue, an underwriting issue, a capital issue? Where
in all the three areas. all three areas. Risk validation. See, it is not creating a risk model. Which risk model gets created, it verifies whether it is doing correctly or not. That I call what I call as model validation. That is one area where we have been working very, very closely. And 2-3 more areas which I missed. This one is within technology itself, quite a bit of work we are working on. I mean, of course, nothing is live at this particular point of time. All the logs, the security logs, it's very, very huge for a bank. I mean, a bank, we are very transaction heavy compared to an insurance company. How do we read the logs and come with this one? Without AI, humanly, it's not possible to completely read the logs. This is one area where we are working with some of the security providers. And even technology logs, log management, how do we address that? So this kind of things, areas where we are working very closely with AI and.
Thank you for that. San, what's the hot product from Google in terms of AI for risk models?
For risk modeling, see, it's still not in a very advanced stage right now because insurance being one of the regulated entities as well. So we use our data models because the AI algorithms can analyze these vast amounts of data and identify all these hidden patterns, the correlationships between data, come up with newer risk factors. So you can price the policies more granularly. You can automate underwriting to a large extent. So these are the use cases that we are working on very rapidly right now, doing a lot of POCs with a lot of insurers, just to eliminate as much as manual effort for an underwriter, make it much easier for a claims adjuster to analyze the claims. So there's a lot of modeling happening in the area of pricing, reserving, optimal capital, what is it needed, because you can predict a lot of future amount of claims. So a lot of modeling in these areas is being used very heavily with
you
AI.
are modeling capital requirements as part of one of your software?
More around pricing
More
and
around
underwriting
pricing.
and automating claims to an extent.
And when you said there was some comment there about regulations,
yeah, insurance is a regulated industry, right? So anytime you're using...
regulations stopping us from using AI?
It has to be very explainable. So any decision that's driven by our models, so if whether to underwrite a person or not, whether I can decline you an insurance based on whatever my model outcome is, there needs to be some level of transparency and explainability.
When do we get to a Google AI model that is explainable?
Yes.
When do you think that's going to happen?
We are heavily investing in what we call responsible AI, XAI, which is explainable AI, right? So any outcome that comes, there is a source, there is a way to explain. So we are heading in that direction. It's not that far away, John. It's pretty much down the line.
You heard it here first. It's not that far away. Thank you very much, Sam. Thank you. Albert, how are you? Are you seeing AI being used for the risk models?
Yeah, so I think from more of an Insurtech lens, it is still a work in progress right now, for some of the reasons that have been mentioned. I think right now, maybe a little bit more globally, we've seen some instances of this more in like the general insurance and particularly the motor insurance business. If you can apply, for example, there's like a company that we've met before in Korea that's using telematics. They have like kind of a plug-in service so you can track the car and use a lot of data around the usage of that car, pretty granularly. And so then you can be more segmented in terms of how you price the policies for individual policyholders. And so I think there's some instances like that where I think you're able to start to leverage the power of AI to then be able to really use much more segmented pricing for policies. But I think in general for insurtechs, compared to larger insurers, it's still a ways still kind of a gap in terms of the ability to really harness it.
Arindam, where in Star Union Daiichi are you using for the risk modeling? Are you using AI at all for risk modeling?
Yep. So I'll kind of quickly touch upon a couple of use cases. Say, as you have rightly highlighted, whether it's a capital pricing or even the fraud risk, Uh, I would say the decision making is more AI augmented decision making, not entirely depending on the AI thrown up answers, correct? I mean, with that caveat, one side of the risk is the capital side where you are actually, when you're measuring value at risk, some extreme scenario of the long trail distribution. So AI modeling, AI scenarios actually helps you to explore some of the highly, skewed distribution wearing long tailed and quantifying the risk up to certain extent with certain bit of more clarity. And you primarily focuses on the value at risk. So it helps you again, helping you to kind of allocate capital, assessing capital in a more precise manner. And of course, the AI helps you in terms of the churning of fast data, getting into a kind of a modeling in that way. Now, when I'm coming from the pricing side, it is also in terms of the data you are churning out and identifying the pricing anomalies, the aberration, which is, or as he was kind of pointing out, some kind of a distortion, which AI-driven modeling, augmented modeling would be far easy to identify, and it's more akin to the kind of a real-time basis. See, in fraud risk, as you have rightly said, you tend to create a buffer in your model to bit of unknown, correct, in the fraud or something. Now the similarity, the pattern, certain geographies, areas seeing some unnatural activities which may be kind of an indicative of the fraud. Can you deploy the similar pattern into some other geographies, identifying something and probe further? So that is what is more of a risk modeling from the fraud risk side. But having said that, one interesting use case which I would highlight, which you have started in India, I think we are the first one, and mutual fund industry also will be picking up, that is the insurance side of, investment side of the risk management. So as an insurer, you hold pretty large volume of investment, and that to a very long gestation period. Now, till now, when you are identifying a stock or a bond, you are essentially looking at a structured data, correct? I mean, the balance sheet, P&L, projection, how the companies are behaving, the sectoral analysis, industry analysis. At some point of time, there is a host of data which is unstructured. Someone from a company is in X or Twitter is something like, hey, I see some kind of a thing. So those announcement, those sentiment which is coming out in Twitter, LinkedIn about a company, the typical research analysis in an investment, they're not in a real-time basis analyzing it. And it helps you to take certain more cognitive decision. Again, it's not a decision, it's a, I'll say, it helps you to take a more often help you to take a kind of a cognitive call. So those of the area we are kind of exploring, and across the, whether it's a kind of Google, Microsoft, IBM, all those have a very specific AI-driven use cases, and hope some of the kind of in the audience are also experimenting with a similar field.
For the bank, what are using AI? What are the privacy concerns there and the ethical concerns? Using data from customers to make predictions about what they want and.
See, no, I'll not talk about any other industry per se, but I would say that banks have more data about people than many of the e-com companies combined put together. We know your salary, we know where you spend, we know what you, this one. Okay. But if you ask this one who uses the data for commercial purposes, you wouldn't, banking wouldn't figure in the top 20 list also. Huh? So I say I'm talking about the industry, I'm not talking about the, only the bank which I work for. So that way, banking industry itself is actually responsible, not for a reason. The reason is clear. We are, for us, trust is more important. That's where we attract money rather than, trust is more important than the tech. I would put it this way. We have to work on that. So from that point of view, I think we have been responsible. But where AI comes into picture is what she's talking about, what is going to come soon on the explainability, and what he was also talking about that. Explainability is one area where regulators are not against AI. Let's be clear. They are supporting. They want us to do that, but not in certain areas. Certain areas where explainability is there, where we are rejecting a loan or where we are rejecting an insurance policy or we are this one, they would like to know why. That particular decisioning system is where regulators have a concern. And per se, regulators don't have a concern in many other improving productivity area, knowledge area. There are absolutely no problems, and that is where we are experimenting quite a bit. And where decisioning is involved, we are curating the decision. It need not necessarily be the decision should be done by the AI, but it can curate a decision and can hand it over to the human to take a considered decision. That's where we are in. But privacy, data privacy concern, more than the act, we have a responsibility to the customer. And since people are putting money in the bank, we'll be a little bit more careful with that particular part.
That's good. That's very good to hear. That's very good to hear. Ethical concerns for Google?
So not just for Google, right? For anybody who are experimenting or in the AI space, privacy biggest concern, like you said. Insurers have a lot of health data or financial data. There's always, so whenever I talk about a concern, I'll also talk about a little bit about mitigating it. We have a lot of techniques to anonymize data. We use synthetic data to train models. So there's a lot of ways around it as well. Privacy is always the #1 concern. Bias and discrimination creeping into the models, people talk about it. Because if you use data that has any sort of bias in it, that can get amplified to an extent when you start using AI models.
How do you take bias out of your model?
You have to use a data set that is more representative of all your scenarios, right? That way, discrimination against maybe a gender or a socioeconomic group, those don't creep in. It is a concern. It's a valid concern as well. But just using the right kind of data to train the models mitigates that risk to an extent. And as Mr. Balaji talked about, the transparency, the explainability of the models is a huge concern. And we are working towards it. Everyone in the AI space is working towards it, making the models more explainable, making it more transparent, not just to the regulator, but to the customers also, right? We owe them an answer when we when we come out with certain outcomes or decisions around underwriting. Accountability. There should be a line of responsibility when you work in the AI space. Have the roles clearly defined, the responsibilities clearly defined when you're building models, when you're deploying models, when you're monitoring models. So there are ways to mitigate every risk that people are worried about. And that pretty much solves a majority of the problem. And there's problem in every area, not just AI. So there are always ways to have proper governance, have like a good framework, have monitoring techniques. There are evaluation metrics in AI. We have all heard of F1 score. There are precision, callback. There are all these techniques that are there to ensure that the models don't wave from the normal path. You put strong guardrails, and the benefits far, far outweigh the risks.
Albert, when you're making an investment, how do you think about these issues of customer privacy?
Yeah, so I think there's a few different lenses, but one, as alluded to, was on the regulatory side, right? Because insurance is obviously a very regulated industry, and so I think when we're evaluating an opportunity, the reg risk component is certainly a big there. I mean, in terms of if they want to get a license, if there's a risk of the business model itself being potentially interfered with by future policies based on the protection of consumers or otherwise. I think those are obviously unknown, but scenarios that we have to think through as well, because I think as we've been seeing in insurance, it can pretty quickly change, right? I mean, like suddenly IRDA can decide they want to focus on one thing or to not do something else. And so I think it can be risky to invest into a business that's too dependent on a single thing that may or may not be valid tomorrow.
Andrew, I just want to take you to a world a few years from now where Google's launched their fantastic explainability product. We know how all the models actually work. And we've solved all the privacy issues and ethical issues. What's your vision for your business and how you use AI in that scenario?
So I'll take maybe 15 seconds on that point. I mean, see, as a well-regulated company and the financial sector, the data privacy and those part, I think most of the company out here, it is well taken care of. As a consumer, we would like to assure you, everyone. So you really filter out data which is personally identifiable, which is to an individual level. And in AI or any data model, you are interested in an aggregate level. You really are not looking for what John does or Arindam do kind of stuff or does. It's more of a aggregate level. Where the concern is, and we are very, very clear about it, I think you have already highlighted, when you are creating synthetic data model, the probability of error multiplicity or some bias creeping in an exponential basis is quite high. And we need to be cognizant of that fact when we're synthesizing data to create multiple scenarios. Having said that, and that definitely there is an AI governance model, we have risk practices, but the more interesting part where I see that, so it's not an utopian thing, I'm quite sure maybe sooner than later, we'll see a world when I am using a super app, the motherhood of all app, kind of an app which is AI layer is orchestrated over a kind of a global database. As kind of Vijay was highlighting, that it's more to do with how you are leveraging the aggregate of data from different data sources, whether it's a banking, whether it's a transaction, whether it's a health, and then using that data at an aggregate level through an orchestration. And that app it's your consumer app, health app, bank app, product app, and it is just plugging in from the right data sources. The multiplicity of app, multiplicity of domain, which is actually getting blurred, and you are living in a one app, super app kind of a thing, and data powered by those kind of an orchestration, helping you to take more, kind of a decision, which is a more logical decision. But again, if you are not committing certain mistake or learning on your own, the fun is gone. So I'm not super excited on those idealistic, all similar kind of a world, but I actually see that is happening sooner than later.
ICICI is in a position to create a super app, as we've just heard. What's your vision if our friends at Google create the software to solve explainability, you've solved everything, is super app on the cards?
No, the super app, of course, we have different viewpoints on the super app, but where I see 5 years from now, where I see when all these are sorted out, is that there are lots of security issues which need to be taken into account. Tomorrow the security problem is, can somebody influence the decisions? It is not, somebody can, today security is different. Ransomware is there, somebody takes out the data, all these things are here. He will not even take out any data, he can even influence the decision outside. So those kind of issues also to be sorted out, but once some of these issues are sorted out, I think AI would be permitting the entire organization. I would say that it's a huge explosion waiting to happen. Maybe next 5 years from now, I think it'll be pretty spread across the entire organization.
Well, that's the quote for the conference. A huge explosion is about to happen with AI. Ladies and gentlemen, will you thank the panel?